What's going on, guys? So quick video here. Let me make a quick video here to kind of talk about the market. So let me go ahead and pull up the hourly chart. What I've got here is the NASDAQ chart pulled up pretty much since the bell opened here. It put in a top at 362.76. Nasty red candle, nasty red candle, nasty red candle. Looks like things are wanting to bounce. Here's where things get a little rough, okay? If we look down at the RSI, we've been extremely overbought, okay, for the last really, day and a half here. As soon as we did hit that top level, we had those nasty red candles, obviously started to pull a lot of stocks in. When I mean pull stocks in, I mean stocks are going lower. But here's the problem, okay? Here's why we can't just jump to the short side just yet. Obviously, the first things first is that the NASDAQ is still over the 50-day moving average by a lot, okay? So if I pull up on the hourly time frame here, where did we touch here on this hour candle here, the 7 a.m. Pacific Standard Time candle? We broke through the 50-day moving average. Now the next candle that opened up at 8 o'clock also broke through the moving average and bounced off of it, okay? If we pull up the daily time frame here, look at the daily chart here, okay? The Qs, ever since we reclaimed this 50-day moving average, which is the red line on my chart here, ever since we reclaimed this 50-day moving average, we've been pretty much linear straight up, okay? Straight up. You know, a couple rest days here, straight up. Rest day here, back up. Rest day here, back up. So as we get to the top of the range here, that 262.76, what we hit is almost perfectly to this blue line, which is the linear regression 50 channel line here, and this upper Bollinger Band. Okay, so we came right into two areas of supply. Also keep in mind that we had Fed minutes today. At 2, we had jobs report numbers that came out already. So we're all the way here at the top of this range, and we had this nasty sell-off. Volume is very, very dry. We are still showing that we are overbought, overextended on the daily time frame. But here's why we can't short just yet, or why we shouldn't be too concerned about things rolling over completely and shorting. We're still above the 5-day moving average, okay? This green line, the 5-day moving average. We are disconnected from the 5-day moving average. Now, could I see this week after Fed minutes and going on to this week, could I see a dip into 359, 357? Sure. We could dip to 357 on the Qs, which would correlate into other stocks, coming in 2, 3, 4, 5 points as well, and still be extremely bullish. Now, if we start to lose this 5-day moving average, could this be a blow off top here? If we lose the 5-day moving average, we have room from 357 to 354. Okay, that could also be a little bit of back testing and a little bit of rest. If we lose the 5-day moving average on a close, I will look for some short side pivots on some stocks that look like naturally they want to roll over. Tesla looks like it naturally wants to roll over, just due to the fact that during this whole rally, besides reclaiming the 50-day moving average, it's been pretty much sitting sideways and then could not break the bull flag to the upside. So if we were to lose the 5-day moving average, we do have room to 354 on the Qs. Now, if we were to lose the 10-day moving average, this is where I would start to be a little concerned. Okay, if we start to lose this 354 area, it's going to have room all the way down to 349. That's not going to look too good. If it's not going to look too good as far as, just taking a dip or taking a rest here. If we come down to the 5-day moving average, still looks very, very bullish, because we can still get that bounce higher and the next leg up for all-time highs here. Again, think about it. We're still a long ways away over the 50-day moving average here. So nothing to be too concerned about. I wouldn't go selling off everything that you have. Currently, if you have, mid to long-term positions, you're going to want to be okay. Obviously, if you're a day trader or a scalper, you might want to sit on your hands for a little bit just to kind of see where we bottom out. Do we bottom out here at the 5-day moving average and get, a total just rebounds? Or do we continue to push through the 5-day moving average here? That would be a little bit more bearish on the short term going into the next few days in the next week. But overall, if you're just looking at it from the hourly perspective here, I mean, it's going to look worse from the 5-minute. It's going to look worse from the 5-minute. However, take a look at what's happening here. We are bouncing off this 50-day moving average on the 1-hour time frame, okay? We still have to get over 360, and we would still have to get over 361.50, okay? However, we did get a nice bounce in here. So just stay patient. There's no rush. Market is open 5 days a week. You know, there'll always be another trade. If you miss anything coming out of the gates, like I know, for example, Square came out of the gates, I think ran all the way up to 253. There was a pivot in there for 250. There's a 3-point move on that. I did catch that, sold out of that for 2.5 points this morning. However, now it's back down to 248. But again, making a bounce. Same thing with Tesla. Tesla looks like it was wanting to break down. At one point in time, it was 640, 639. Looked like it wanted to test the 5-day, the 50-day moving average on the hourly chart, and you know, got that good bounce. So we have to wait for these Fed minutes. We have to kind of see what's going on here. Let things kind of bottom out. If things want to bounce off this 50-day moving average here, we might be looking okay for tomorrow. If we start to lose this area here, you know, 359, 358, that would be an area I would start to get concerned about here to the downside. But overall, just stay patient, guys. You know, there's no need to rush, and I will catch you guys all in the next video.